sure I added it to everyone. Okay, I did. Cool. I should go to general chat, be ready for potential question.
Wunderbar.
Hello, hello. Do we have a joiner? Mm-mm-mm-mm. Hmm. Well, I guess we can get started in a minute anyway. I got 0 views so far on my end. Alrighty, well, I guess we can go ahead and start. Welcome for anyone that does come
Like
in,
fun.
and thank you for having joining us. Sorry. First of all the stuff we talk about is for entertainment and education purposes only. None of it is financial advice. No markup that we do live is a signal of any kind. Um, we're only just doing this for our own purposes, explanation and entertainment. Like I said, trading is a high risk activity. You can and will incur losses, so use proper diligence and risk management, and only risk capital on systems you've tested yourself. That being said, thank you guys for coming, and I'm going to go ahead and swap over um, with Lemons here. He's going to show off his recent trade, and we'll start with that.
Yeah.
Um,
Pretty simple trade, but I'll just explain. We're on UJ just now. We're kind of playing between these two areas here. So obviously at the moment we were down in this discounted zone, and last week showed that we were marked up a kind of a channel that we were in. Here, and we're broken out. And I like how we've broken out here with authority. If we look at this on the daily, we actually left a nice little gap here. Actually, yes. So there was a gap here, which kind of broke out, and price kind of returned to it. So I don't often mark up these channels, but it's also like just a nice thing to have. It's just as kind of extra confirmation. Obviously, as we can see here, it's just been playing about through this channel here. I haven't marked these lows here with my fib because it kind of has already if it's kind of returned to this area, it's taken liquidity from this bit here. So for me, that kind of fib has already played out. And the first time where we get kind of a pull away where we don't have a retracement into my kind of fib area is this kind of area here. So if I take this fib here and we take it down here, as you can see, it didn't give much. There's a term called fair value. It just means that anyone who is a fib trader like I am didn't give those traders the opportunity to get in on this trade. So, for instance, if you're a fib trader, one, it hasn't broken this high anyway, but also it didn't offer any kind of retracement into this area before sort of taking up. Again, it moved to there, didn't retrace enough, and then it just took off. So to me, that's really showing intent, broken out of this channel that it's been in for a couple of days, and we moved up to here. Again, it didn't pull back 50% retracement, so I just keep pulling my fib up until it gets to there.
I like
You're
to use,
saying just
yeah, I was gonna say I like to use your fib pretty much the same way I do. Like I just keep dragging it up until I get that retracement, and then if it's a long trend leg, it's a long trend leg.
yeah. I mean, it's not the same as your stereotypical way that some people use their fibs, and like Bear has a good explanation of how traditionally the fib is used. But um, I say fib just because it's called the fib tool. It's not. I don't use really it as a fib retracement. I just use it as a measuring tool.
Yeah,
So when it
same,
comes
same.
back, as you can see here, this is kind of my golden zone, and I drew a box here. I set an alert for this area, and it just came into it just here. Obviously, also quite nice that it kind of aligns up with this nice channel as well. That kind of had the resistance from before. And as we can see, we had your high, your low, high, and then what I would say here is this is a high that kind of pushed down into this low, and then this again has made showing some sign of going the other direction now. So after that happened, obviously what I did is I did the same thing on a lower time frame. So this fib is more sort of higher time frame, maybe an hour, maybe 15 minutes, and now we're sort of coming down into a sort of this is fractal, same again. We had fib here. Let's pull back into this little area, and as we can see, very nice. Sure, if you went down even further into the 1 minute or whatever, you'd have a very similar thing happening here. But we're going because we're in discount. I felt comfortable going with my just the low as my stop loss instead of my extra extra stop loss here, and then my usual take profit is at the minus 2.5, which gives me a nice 3.24. As you can see, when it came here and it started retracing, I was like, oh, it's gonna be great. It's gonna carry on going down now, and I'm gonna be out just the right moment. But then it did
Hmm.
just keep going. But can't cry over
Yeah,
spilt
that's how it
milk.
goes.
I'm
Yep.
very happy with the trade. Obviously, it came back and it fulfilled the minus 0.2.
What
Pretty
what would be
good
the
here.
reward to that high to the left? Just the leg
High
continuation. Yeah.
of this one here.
Yeah. Just take a look at that.
That would be a nice 4 point, just short of
Nice.
4.5.
Six. Sweet.
And to the top here, it would be 6.4.
Oh, nice, nice. It
So
just seemed.
I very much could have uh, gone here, but I tend not to hold my trades too long.
Yeah, yeah. No, I
And
totally get that.
obviously, there is still some sort of
The fib.
untapped.
the fib level and the way it bounced made me just feel like it would be a nice little leg continuation trade. Nice target at that
Yeah,
high.
I mean, when you look at it sort of as a whole, sort of, we take it back here. Like we are just,
Oh, look at that. I mean,
yeah,
yeah, technically even gives you very risky, but a nice, very far target to target that liquidity up there. But that's risky.
absolutely, yeah, some nice liquidity sit here.
Yeah.
Um, Anything, obviously, the economics of the yen you'd expect, and
I
conversely against the US dollar.
I would be careful right now for anybody who's a trend trader to be trading like long-term trend highs and stuff like that on Forex right now because of a lot of the stuff going on.
There's a lot of, yeah, it feels like there's going to be a lot of kind of consolidation going on for
Mm,
the next little bit. But yeah, on the grand scheme of things, it does look quite small when you zoom right out.
I
But
know, right? Trading relative.
well,
Well,
actually,
what? Okay,
it does. It looks much bigger than my even smaller trade that I had the week before, which was this one just here that I
what's
showed last week.
wild is there's people inside each of those little candlesticks on like the second time frame, just taking orders, moving the market around, and it's wild.
That's right.
Anyway,
That's it.
yeah, right on. Okay,
Um,
nice little
I
setup
haven't
there.
really been looking at any of the other markets. I know that the Nikkei has been pretty nice, I believe, from a
Oh,
fractal frenzy point of view.
I did take a trade, but it was break even this week. Let me take a look at what date that was actually. I gotta go through my history real quick. Okay, it was the Nasdaq, and the trade was, and okay, so due to request, and I'll have lemon screen set up for this too, but due to request, I'll switch to my screen real quick. I do have a
No
full
worries.
screen set up for the day, so we don't have to have that pink border, at least for now. We'll figure that out. There's a user that requested that, so for anyone that likes the pink border, I'm sorry, and for people that wanted it full screen, well, there you go. Um, let me pull up where this trade was, and we can talk through it. I like to do bar replay so that we can just look at it at the time it was happening.
Fancy pants.
And this was on, I think this one is 11 hours ahead. So would that be 11:11? Let me see. I think that's right. So be the Okay, so my concept was that if you're looking on the 4 hour, we have this kind of bullish trend. We did come and sweep this liquidity. I don't know if this is like it's going to be the start of a downtrend or not, but it left all this liquidity up here. It came down, it swept all this stuff and flipped, right? So the rule, sweep and then flip. So I thought this zone was going to hold. We were at that point. It was kind of consolidating, leaving some liquidity. I'm pretty sure I was just looking forward to. Oh, it also it gave me the breakout. So we had the breakout, and I was looking for liquidity to be swept, basically. So I'll play it on the 5 minute. We had a taking of liquidity. It came all the way down here and took this liquidity, and then flipped with it right there. Actually, it doubled it, took this liquidity. And this is when I got in the market, came down to this zone. I got in, and my idea was to target because, okay, again, I was kind of greedy on this one anyway, but it's okay. So my idea was that this could be the start of continuation. So I was like, it'll at least come up and liquidate this stuff, even if it's going to come down and continue the downward trend. I felt like it was going to liquidate this, so I had a very large target. So it kind of looked like this. I got in on this continuation here. I just needed to protect this low, and my target was up in this area. Right, nice chunky little trade. I did set it to break even as soon as it came. I believe it closed above this stuff. Yeah, okay. So it closed above here, and that's when I moved my stop to break even, and then I'm pretty sure it came out and took me out at even. Yeah. And I don't remember if it played out or not. No, it didn't. Okay. So, I mean, it was fine. That's why I protect my capital. It was break even. It wouldn't have played out.
Absolutely.
That's okay. But, um, yeah, that's it. So it was kind of a non. I ended up losing $7 because of the commission and the size that I had. Um, but it was like I was like a $4 gain or something and $11
No chicken
commission.
nuggets for you today.
Yeah, basically. Anyway, but it was a nice concept. And then after this sweep, I think if I remember correctly, it did eventually come up and take out those highs. It was just after that deeper sweep there, if I remember correctly. I remember I was watching it later. I think it did take those highs eventually. Or it at least took these highs. Oh yeah, it did. Okay. Did it? Boom. Oh no, that's not even the highs I was looking for. Oh yeah, it did. It did. It took the highs eventually, but it was after second sweep, so I got out. But anyway, that was it. That was my only trade. And then I was nauseous a few days before that, so wasn't in the market at all. And then, as you guys know, yesterday's session that I normally in the market for was a power outage. So that's pretty much it. I had a break-even trade. Um, I guess we could do live analysis since that's all I got for our trading setup.
Yeah. What are you
Just
thinking on GU right now?
let's take a look.
5 minute.
Just 5 minute exclusive. Take a look.
5 minute only because we're at the point where um,
Ooh, okay, okay. Hold on. Let me
we've,
look at the
we've
hourly
had
before I look at the
a
5 minute. So let me
yeah.
first let me turn off this indicator so it gets out of my way. So we are at supply on the hourly. And if you're looking, this is coming down. The internal trend here is actually the swing trend actually is downtrending. It's the higher time frames swing trend, probably 4 hour is bullish. Let me see. Yeah, 4 hour swing trend bullish. It's coming down to the low. So let me mark this up because this is kind of how I'm going to talk this out. Basically, we're in danger of this zone, but being in danger of a zone does not necessarily, I mean, this is a higher time frame zone. So let's just take a look. So on the hourly, we're in this zone where things can get bullish, but it's got lots of liquidity, lots of room, and even a point of liquidity under here that could be a nice target to even continue the bullish trend. So kind of overcomplicating it, but I'm just trying to explain my thought process on the 5 minute. So this is bullish price action right here, but we have this liquidity under here and this deep liquidity, which means it could easily sweep this before it really goes bullish. And if you look, it was struggling to go up. It was a struggle. It did go up, right? It did, but do you see how easily it went down? And the struggle went up. It's touching the supply area right here. So on the 5 minute, oh, let me mark that. Let me mark the supply actually on the hourly because that's going to be important for the story of the 5 minute. Okay, so here's the supply. Let me tighten it up a little bit so we have liquidity point. So on the 5 minute, we're at this point. It looked like it was consolidating in this area, broke right out, and then immediately started coming down, which means this is some form of liquidity, and it took this liquidity out over here to come up into the supply zone. That's a very leading bearish indicator, right? We don't know it's bearish technically. Oh wait, I'm all looking in the past. I'm sorry, man.
Mm-hmm.
Well, I'm gonna finish analyzing what I was looking at here anyway, and then just
Sorry,
because
you're only like half a day behind, I think.
okay, well, looking at it right here, this is a leading indicator of bearishness. It could, it's bullish market right now, so what I'm looking for is kind of a bullish liquidity sweep to flip to the bullish side, but right now we've triggered potential bearish downtrend. So again, we have all
Yeah.
this liquidity down here. Um, so currently bearish, potential future bullish movement, but right now we're going bearish, and because this was the extreme supply and hourly, there's a good chance that we're at least going to sweep this liquidity and trick people and they go bearish at minimum. So I would say that this is where it starts look, targeting these liquidity points. Let's see what happens. Okay, so the market has um, came to this demand and then flipped it. Okay, it flipped, came to the point where it flipped it, and it's holding right now. I don't know where it's going to go, but it's currently holding, and it did its job. Flip zone held, came down, start targeting liquidity. Like I said, I believe all of these liquidity points are targets, so we'll see if it takes any or all of them out. Oh, we're live. Okay, so what do I think is
We're live now.
we're talking about it live. What I think is happening now is that it's currently picking up supply that it picked up from here to target these liquidity targets, bringing the five
Yeah.
minute bearish. So I think the
Yeah.
5 minutes
I
currently
think it's
bearish.
in a good little spot here. Also, we've had that kind of the breakout from the sort of the Asian kind of breakout,
Yeah, let me throw that
and
up there.
we are getting into the point where we can possibly look for sort of extension of that kind of breakout area,
Yep,
which is great.
it created this point right here, which yeah, arguable, but since it didn't do its job and hold it and had like the real breakout of the area, it does look like it's bearish intention. So what I think is going to happen is it's most likely it did pick up some deep demand. So what it's most likely going to do by looking at the hourly is probably trick people and target some liquidity. So I think at some point maybe it'll create a strong liquidity point right here and then come target it after that. Or I don't think it's gonna come target this stuff yet, honestly. I think we're going bearish right now to target this stuff, but there's a potential chance that we sweep that, pick this supply up and continue. But I don't think we're going bullish yet. I think we're gonna go ahead and visit this or even
Yeah,
look to sweep this stuff. Because if we sweep this,
yeah,
guys, normally I'd say just sweep this and continue bullish. But look, what is right next to this? Orders have already been filled here. There's nothing really holding this. So if
yeah,
it could sweep this, why wouldn't it? It came all this way already. All the money's in. Why wouldn't it just sweep that? Maybe stop here, but look at all those wicks. That's a lot of liquidity just resting here. I don't see why it wouldn't go through all of this and at maybe best case scenario for the bulls or maybe even this will hold. This right here will hold, right under here. So once it liquidates this, this is when maybe when I'd be looking for a bullish continuation. Since we're looking at the hourly, that I guess it's irrelevant for the 5 minute yet. But that's I wouldn't worry about bullishness really until we start sweeping this stuff. Maybe this at minimum. So
hmm
if you're a 5 minute trader, you could sweep this and take some bullishness. But here's what I warn for 5 minute traders. This is what I don't like to see. If your 5 minute gets swept right here and you get in the market on a bullish trade at this point because we're talking about the hourly it going bearish, it could easily go bullish here, but you're using 5 minute liquidity, so your target should not be beyond a 5 minute zone. Whatever you can get a nice risk to reward, find a 5 minute liquidity point and exit the market because if, and I could be wrong, it could just pick up the market here because that's, clearly liquidity wick right there. It can hold and continue bullish, but if you look, it didn't. Supply is doing its job, and demand hasn't yet. Right? Supply is currently holding, demand hasn't. And again, it was a struggle to get up to this point, and we're currently bearish. And if you look on the 4 hour, there's fair reason to believe that the supply will liquidate that and
yeah,
maybe go bullish. I don't know. It's just things are too lined up for me to say that this zone um, could be a high target. So if you get in and you're looking for bullish price action, do not start targeting uh, 1 and 4 hour zones. Even if later you see them play out, I use logic to make that call. You know what I mean? You can't just use a 5 minute point of liquidity and expect it to hold on the 4 hour. That's all. So bearish right now, potential bullish price action right here, temporarily. That's my current view. So
okay,
I
Pat.
beat that to death, but just wanted to get the full
Mm,
picture.
that's great. Like, I think it's a good sort of lesson that obviously you can target these things, but like it's got to be something that's like viable, and also what time frame are you targeting? It's got to
Mm.
be viable for a certain specific time frame. Like you can't just target 5 minute price action and go target 4 hour take profits.
Yeah, yeah, yeah. It doesn't, unfortunately. You'll randomly, and you might luck out on it on one back testing session or something like that. You will randomly luck out and find that right zone, right? If you keep swinging for 5 minute zones.
Mm.
But it doesn't matter if you
Oh yeah,
liquidate
we
your
can.
account before you find one. But yeah, so looking at
You said
GU,
you had a question from your streamer chat.
No, no, it wasn't a question. It was just a suggestion to do the full screening thing, I think is what I was talking about, if I remember correctly.
Oh, I
Wait,
thought
let
you
me
were
go.
talking about targeting large
Oh, yes. That's right. Yeah,
RR.
okay. No, no, no. It wasn't a question.
Hey, this is what
Oh,
I'm
and
here for, bro.
hey, hello, Pat. I just noticed. I'm sorry, I didn't catch your message till just now. It wasn't a question, but I saw them doing backtesting, and they successfully, with my system, or the kind of like the concept of the system that I teach, um, were able to target like a 28R or something in a backtesting session. So I did want to talk today about large targets. Using the system that I do, and actually the way that limits trades too, because you can combine time frames, literally just doing the pullback and the Fibonacci, and then looking at the higher time frame. If it's at a zone where the same thing is happening on the higher time frame, because we both teach the same kind of concepts that are fractal. So he teaches like his kind of Fibonacci and imbalance, which is where the market often goes to pick up liquidity, and I teach the overall waves of the market and the liquidity points. They're very similar things though. So both of them are fractal, and you can use the waves that we trade with liquidity to target very large targets. Very large targets. I think both systems, and I think Alex actually has a system that you could technically do the same thing. But the thing is, so the reason why you don't see us always targeting large targets, even me, who I confidently talk about it in my trading, is because they're rare. So large targets to me have to have a baseline. So I wouldn't use the 1 minute, right? The 1 minute and the hourly, because you can get a large target that way, but the 1 minute is an inconsistent time frame. You're going to get a lot of false signals because it can be manipulated. So I ignore the 1 minute. So don't use the 1 minute for your large targeting. Don't try to do one pip stop losses and stuff like that. At least not in my opinion, right? There are going to be other traders out there that disagree and you might find success with them, but I don't think you should do it that way. Instead, what I like to look for is just what I'm normally looking for, the points of liquidity on the 15 minutes. So if you're looking at the 4 hour here, right, it's an uptrend and it's pulling back. So let's look at the last time it pulled back right over here. Let me put my bar replay over here to where it's pulling back, right? And let me mark this up. The zones that it's going to, there's this whole little area here actually. Let's look at it on the 15 minute. All right, so it's pulling back on the 15 minutes. It's like going bearish. And you're at this extreme zone on the 4 hour. So the concept you're looking for is just a strong liquidity sweep, right? Basically. This constitutes a strong liquidity sweep because it kind of double bottomed. But you could also wait for like trend changes or actual, strong liquidity in that it broke a high. That kind of strong liquidity. But to me, I use like three different types of strong liquidity. I've talked about them before. Double bottoms being a type. So to me, this is strong liquidity. Let me see if I missed any strong liquidity that happened after. Yeah, this high was um not really. This is our only real strong liquidity sweep. You got to kind of watch out for stuff like this. Uh, Even this in and of itself, no, no, because that wasn't strong liquidity. This is it right here. So you have this double bottom. It consolidates at this point. So supply and demand are fighting, and then it liquidates it. It flips it. So the point that caused the flip, right, in this area. Now, unfortunately, it doesn't come back and visit the deep areas that I like to go for, but instead, it creates this little zone right here, and then eventually breaks out of that zone, closes above it, right? So now the zone that closed above it is valid. I don't like small little zones. So this one is too small for me, even though technically that's where it went. You got to be careful because those could get swept. So I like to take like the whole little zone that did it. So to me, that would be my entry, right? That zone is where you enter the market. Okay, so on a 15-minute trade, doing that, the idea is that maybe I target a 15-minute point of liquidity. There's one right here. That gives you a nice little 2R. That's a little too small for me. Let's look for a better point of liquidity. 3.37. That's a little more realistic. Now, does that make sense though? You can't just have a bigger target and call it good. That's not going to get you anywhere. So I'm using logic. So there's a liquidity point. Was this the type of sweep that can target that? Well, it did sweep this deep liquidity. Flip is it part of any trend. It is in this zone that we previously marked already. This bullish kind of liquidity point. Let's refine it to the one the lowest one it made it to. Okay, it looks like this one right here. Did it get lower than that? No. Okay, so this one, let's look at that on the 15-minute. So this is a 4-hour low point right here that we have marked. And the idea is the trend continue from here? So it had this deep liquidity and all this liquidity right here. So is this enough liquidity? Is this a valid amount of liquidity to continue the trend? Well, this carried this entire trend the whole way on the 4-hour and never got revisited, and finally did, and it violently, after liquidation, it violently went back and took out that supply that caused the liquidation, like with absolute violence. So that's a sign of a trend continuation. So yes, you could validly target this. As a matter of fact, using the 4-hour chart, this is the first point that you could probably consider targeting a 4-hour continuation. So something like this, right? And that's where the big rewards can come in. Because if this is a 4-hour continuation and you're correct, you should be able to target the 4-hour high, right? Is the idea, is the concept. Now, you'll see a lot of times that the trend will go way longer. Do your own testing for that. I don't like to not have a target. So if I don't see something to the left that I can target, I don't want to be in the market. So yeah, I don't know if this is where the trend actually continues. Oh no, it looks like a tag out. But then, so do you see how it goes much higher? Let me see where it tagged out. You got a tag out right here, and also that was a sweep of liquidity. It flipped
Yeah,
the
that's
liquidity.
liquidity taken right there.
What's that?
No, I'm just agreeing with you.
Oh, yeah, yeah. So it flipped that liquidity, so the zone that caused that flip is also valid. And if you look, so this one, we'll just count this as a loss. Anyway, even though I'm not really kind of tracking right now, I'm just trying to talk about big targets. Um, but anyway, swift liquidity in the zone that caused it is right here. And if you look, it then started building up more liquidity, right, as it came. It didn't visit under this liquidity. So at this point, when this supply is still holding, you're good. If it breaks past the supply, it's too late to use this, and I'd be careful doing that. You could literally just use this zone and be in at this point already. But I'm just saying it did create this liquidity right here, this double bottom. So right underneath that liquidity, especially at this double bottom point right here, you can now use this liquidity basically as your entry and protect yourself with the lows, right? Because if it's a strong liquidity and the lows are going to hold, um, yeah, if your thesis is right, the lows should hold because they're protected and the liquidity is right here, right? So you always want to give yourself some breathing room. It looks like it barely touched the lows themselves right here. It like barely didn't touch them, but I always give myself a little bit of breathing room because of stuff like this. Because it might not have touched them on this broker, but your broker, it might have dipped a little lower, and you screw yourself that because of this chart or whatever. And so that's why I always give myself some breathing room. But anyway, same concept. Is this a logical point to target the 15-minute trend? It is, and the same thing applies. This one actually plays out. I played a little too fast ahead, so we get to see that it does continue the 4-hour trend.
So Moonflower's asking very similar to what you're already explaining. Do you sometimes layer trades with large targets? How do you manage risk then? Do you have a set rule for take profit to lock in
So,
some profits? Also, backtesting is much easier than seeing price come down in the live market when you're in it a couple of days.
okay, so you asked all of the
Um,
things that I'm literally about to get into when I talk about this. So first I wanted to set up a trade. Okay, so first I wanted to set up a trade. That was a large reward. Now, do you see that I used logic to target a 4-hour high, and that's where it went. So what I'm trying to say, first of all, when it comes to large targets, I'm not targeting 50, 100R. This does happen to be a 20R trade, right? But do you see how much farther it goes? It goes all the way up to 56R at some point. But I'm not talking about that. I'm not targeting that. Why? Because I'm looking at a point to the left. The concept is the trend is going to continue if I'm right. The trend is going to continue. What does that mean? It means it's gonna break the high. What does that happens after that? We don't know. Nobody knows. So why would I add a new variable in my system when I could get nav a 20R on the continuation? So rule number one. Do I have a set target? Yes. If I'm going to take a large trade, I'm swinging for a trend continuation trade. that means I'm targeting the trend high. Period. That's my that's my target. I'm not going to target beyond that. If it breaks above that, I will go, let me see how far I can hold anymore. I don't trail my stop anymore at that point. If I was trailing up to that point, I'm out of the market. I don't care about all this. Yeah, cool. It probably feels good for any person out there that's holding onto their little demo trade just to see how far it goes. That's great, but I want to get paid and go home with my big money for my trade. Two, I don't nab this entire 19R right here, right? If this was my trade. So this is where I'm going to go into managing the trade. So here I am on the 15-minute chart, right? Let's say I'm in this trade. You have to live through. So I entered in at 2:15 my time, right? 2 in the morning, where I got tagged in. I'm holding this trade, so in bed at that point. I wake up to bring my child to school, and it's this time. I go to check on my trade. I am currently up. Oh, crap. I'm gonna have to move this over here so I can see my running risk. We're gonna talk about what it feels like with it. Now, luckily, this is a very bullish move right here. I kind of want to go through
Yeah, I was
another
going to say this
example.
is the best of the best
Yeah,
when
I
it comes
want
to holding a trade.
I want to go through another example, if I'm honest with you guys, because this is ridiculously awesome. Like this wouldn't be, but for a new trader, this would be hard because here's what's gonna happen. So here it is. I'm up 11R. So let's say what is a common account size? $100,000. I'd say to risk 0.5%. So let's say you listen to me and you risk $500. You are up 5,500 bucks in your account in unrealized gains. Okay, at this point, right? $5,500. Well, I drop my kiddo off at school, and then come home and I want to take a nap. And now it's dipping down. So now I'm probably in bed at this point, and I'm down an R, so $500. So I'm down from 5,500 down to 5,000. I've lost $500 in unrealized gains, right? And you have to feel each of those candlesticks, especially if you're watching the trade. I would not just sit and watch my trade at a long trade, but anytime you check your trade. Now, this happens to be a good example, so let's go real quick and just look at a random 4-hour bar and take a look at not a better example, a harder example, because the other thing I want to talk about is holding on to a trade, right? Okay.
Yeah.
Here's a good.
Whilst you're whilst you're looking for that, I'll quickly give my very quick answer. I do not hold large trades. Generally, my trades are between 2 and 3.5 R. When it comes to lining up, I don't know whether you were here at the start. I gave a small example of the way that I trade, in the sense that I look on the higher time frames for um, the general bias. So, if for instance on the higher time frame we are in a discount zone, I will look for trades to the bullish side. I set out fib retracements on the higher time frame, then I'll look for the exact same thing on the lower time frame. Once I have established a fib retracement on the lower time frame, I will enter it, but I won't go for the higher time frame, even though it's likely that it will hit the higher time frame. I just prefer to be in and out fairly quick. So I generally look at the higher time frame for the overall move and just get in and out with a high probability move on a lower time frame. And I kind of went through that at the start of this
Yeah, yeah.
live, so you can go back and have a look at that if you want to. Unfortunately, Moonflower, we haven't set up my screen
To be
the
full
same
screen,
way as
yeah.
Jezza, so
Yeah.
unfortunately you're going to have to grid and bear the moving
The pink,
charts in the
yeah,
background, but
yeah, the
it's
pink
only a
bars.
5-minute demonstration.
Yeah, it'll be quick. But I think I promise that next week we will have his full screen too. So we're just
Yeah.
setting up.
Oh, we just won't show it. I can just be color commentary.
Yeah, we'll just turn it on blind and describe the charts together. Um, so I this is so if this works out, not only is it uh cool to walk you guys through this, but also proof that this does happen consistently over and over in the market. So, okay, do you see how we have some strong liquidity here? It's breaking highs right here, right? So we agree that this strong liquidity, it sweeps that right over here. Okay, so here's the point that swept it right there. It closed above that, but I have two rules. That's one, the area that closed above it. If you want to get in earlier, though, let me mark up that point actually so we can look at it. The other one is what? For anyone who's been here before, on the entry time frame, strong liquidity being swept. So we have strong liquidity swept on the 4 hour. And so now if the point that caused the sweep gets closed above, that is a bullish trigger. The other bullish trigger is strong liquidity, recent strong liquidity gets swept on the inter time frame. So strong liquidity got swept at this point right here, right? And that also happened to coincide at the exact same time with the strong liquidity sweep right here. Because look, we have bullish move right there, bullish move right there, and then consolidation continued, and then it swept it, and it was the same time as that. So here is the point of liquidity that happened. Here's the flip. So the zone that caused it is right here, right? It visits that zone immediately right there. That could be our entry in and of itself. So our first potential entry is right here in this zone. Protect it with some, some spread, basically. And if you're correct and the trend is going to continue, right? So here's where you can target large 50-minute targets, but we're back on the idea. So if the trend's going to continue here, let's go ahead and target the 4 hour high. Let's just be ballsy with this one, and hopefully without a tag out, it makes it that high. But we're going to talk about living through it on the 15-minute. Okay, so your reward, you know what I'll do? I'll leave this one up here, and then I'll do a secondary one while we're going. But this is 61R potential trade. We don't know if this is going to play out, but 61R. So here's how I do it. I'm up at this high at this point, right? And that was, um, I forgot, 8R or something like that. Okay, right, it's around 8R. At this point, it's time to peel off positions. So you're up 8R. So let's go with our $500 example, okay? I'm up $4,000 at this point in unrealized gains. So you could cut a huge chunk of your profits and cut it in half, right? And do half the position size. Lock in 2,000 of those dollars, and now you have $2,000 riding, and you've gained. You've gained 4R of your original risk, and you lock that in. That's a huge amount to cut off if you're looking for such a chunky trade, even though it's probably smart to preserve your capital. So what I'd recommend is taking a fourth of it off. So you're up $4,000 at this point, and you profit $1,000. So now you've locked in not only the amount that you'd risk plus that amount again. So now you're good, you're golden. And if you want to even be safer, you can then set your stop to break even. But for this example, let's not do that. Let's just ride it and not complicate the math. So you're have $1,000 locked in, or 2R at this point from your original risk. Everyone remember versus $500 originally. And now you have 3/4 of your position size, right? 3/4 of your position size left. So you're currently up $3,000, okay? Then you ride it up to this high, okay? Which is 14R, right? Or 7,000 originally. So you're at 3/4 of that, right? Oh, sorry, public math. Let me just grab a calculator and make this easier. Um, 7,000-ish. I'm just gonna do 7,000, and you're up 5,250 at this point. At this point in time, now you're up 5,250, and you can lock in another um another quarter of that, which would be a third of what's left, basically. Um, so you take out a third of your position size, or $1,700 ish, basically a little over $1,700. Remember, you're locked in 1,000. Now you have $2,700 or 5R at this point, right? Now, yes, you have much less than the 14R that you risked and analyzed at this point, but you have locked in a lot of profit and rewarded yourself in the market. Now, this is something I rarely recommend doing at first, because once you're really, really, really comfortable and you've done this enough, you can hold your position size and trail your stop. I'll talk about trailing stop in a second. But first, I just want to talk about peeling off position size, right? Because you're looking for large targets. You really don't want to risk extra capital if you've been right this far. Now, once you're beyond this and the trend is going to go, let's see if it makes it. Okay, it's closed above there. That tells me that the trend is now flipping, and you're kind of good. At this point, you don't have to peel off any more position. You can let the rest ride and trail your stop. So at this point, you're now holding on to half of your original position size, which, let's take a look. Um, so if let's see if it rides out the rest of the way. So remember, you've pocketed $2,700 or about a little over 5R of your original risk, and then with what's left, you can just let it ride. And we'll talk about trailing stop in a second. I just want to see if this plays out real quick first. Let's go back to the 4 hour. Might not even play out. And I want to talk about living through it in a second, but first I just want to get to the math and see if this plays out. Ugh, come on. I'm patient. Even in back
Just
testing.
watching it, living through that, no
Yeah,
money,
yeah.
no money's on the line right now.
Yeah, yep. Yeah, I'll talk about that in a second, but I just want to let's see if it even plays out before we even finish this example up. Ugh, come on, it's gonna take a million years on purpose for me.
Three, two, one,
Boom.
go.
Okay. So it did. It played out. Okay. So 61R, but remember we only have half, so 30R. So 30, 15, 15 percent basically because we're risk 0.5%, right? So 15 grand and the 27 you're already marked. So 17 grand. So you're instead of 61R, what is that? You're getting 34. You're banking 34R, right? Which is chunky. That's a huge amount to bank even out of the 61R. That's kind of how I'd manage it at first, right? The peeling off position, uh, not all your position though. You don't want to peel off a huge amount of position with a small amount of reward if you're doing this big analysis, in my opinion, because you are cutting yourself short. Eventually, you can learn to hold it all. But now let's go back. So that's just like how I'd do the position peeling and talk the math on how that would work out for you. So again, you risked for 61R, you were correct. You banked 34 of it, but you guaranteed a little over 5R and then trailing. So I'm going to talk about trailing my stop. So trailing stops to me work like this. So you're doing a 4-hour trend continuation. So once it breaks highs, let me go back again. So once it's broken the highs, you can start looking for the lows that cause those breaks. Valid lows, though, like not these legs. So your original trade was way down in here, right? So it's not probably not going to revisit that area. So you could set your stop to break even way before this point. Once it starts breaking those highs and showing the trend on the 15-minute, you can set your stop to break even. You're no longer at risk anymore. Now, you want to wait for a pullback first. Any pullback will do. It just needs to pick up demand and then continue. It did that. Now, that gives you a point for a stop loss, right? But you got to be careful because there's all this liquidity here. Now you see this gap between this and this. That means that this could be resting liquidity for this zone. So now I'd move my stop up there. So where was the original? I need to let's go back actually because I should have kept the original. There we go. Okay, I want to keep the original on. Okay. So once we're up here and it's broken these highs and created this point, now you can set your stop. I'm just going to use a new long position tool. It's unrelated. Like don't ignore the take profit part of this. I'm just going to show people it for the stop loss. So remember, there's this gap here. So this could be used as liquidity for this. So this could be your new protected zone. If you're right, and this does get used as liquidity for this, you're not risking it by moving your stop way up there. You're doing it here, which for this trade would be you'd be locking in 16R. So if you're wrong from this point on, you still have 16R, right, to your name. And then once we make a new high, eventually. Okay, we made a new high, right? So now we have these lows here. So before I just move my stop up to these lows, I look at them, right? These lows have a bunch of liquidity resting there, or a bunch of equal lows. And that point that we already had our stop here is still has that gap there. I probably would not move my stop up. 16R is an okay bank to lock in. I probably wouldn't move my stop yet, if I'm honest with you guys. So do you see how I'm using logic to deduce. Yes, I'm risking a huge amount from here to here. And again, I'll run through the emotions of it in a second. Um, Actually, we're probably almost to was this the 61R point right here? Yeah. Okay.
Yep.
Oh, it swept this liquidity. It swept this liquidity now, right? And it flipped, creating a new bullish trigger that gives me a new stop loss zone. So regardless of the bullish trigger, this zone in my mind is protected. So my new stop loss moves there, which underneath this, again with some breathing room, same as I would be thinking about it for trigger. That is a 20. So now if I'm wrong at the 60R, I'm risking 20R, right? I mean, I'm locking in 20R at this point, right? Do you guys see how I'm doing this? I'm using because I'm doing a 4 hour trade, I'm using the 4 hour to move my stop up. And I always trail my stop. Even modern day, I do always trail my stop with the trend because I think it's kind of foolish to be really correct in the market, which again, these kind of trades are rare. That's why, you have to wait for the 4 hour to come to a 4 hour pullback zone. I don't think we're gonna have time to talk about how rare they are. We can do that another day, but I am gonna run through real quick what it feels like live. Okay, you guys get the concept of moving your stop up, I think now. So let's now go back one more time, and we're in this trade, and you're gonna live through it, right? Live is the idea from the 15-minute chart. I'm going to go up to the point where it's being wild up here, though. Let's start from up here where it's like first pulling back because there's nice bullish price action on the way up here. Although, yes, you still have to live through it, and there's this pullback right here. You're not going to feel it as much as you will this. Let's talk about this on the 15-minute. What the heck? I guess I'll just go back to this bar. Here we go. Okay. So here you are on the 15-minute, and you are. Oh, dang it. I underestimated how big this would be. Okay. Oh my gosh. Okay, close enough. Sorry guys, I'm trying to get this concept going where you can like live through it, and I'm gonna be moving this up and down. So here you are at this point basically, right? And you're up at some point at for my time, again, I'd be sleeping. So I'm just gonna talk you through like how my life would be, and you could just replace yourself with me. I'd be asleep at this time, right? And probably going to sleep soundly at what is this risk reward 40 or something like that? Yeah, 41. Um, sleeping soundly at 41R. Let's keep this like this, right? And then so I wake up. Let's say um I wake up and I'm actually like in the market again. So the next time I would be actually getting ready to get in the market right here, right here. So the last I was up 40R, right? So let's the $500 risk, so $20,000. Wait, right? Yeah, $20,000. Holy crap. That's crazy to think about in like cash numbers. Um, I would be from $20,000 to $19,000. Okay, so
Yeah,
the
I think it's
thousand
more than
dollar
19.
$1,000 change, and then the market is just consolidating here. So you might just be able to live through this, even though you are seeing it fluctuate by the thousands. It's not until the next session the next day's session, New York session almost, I get a drop all the way down to about 16,000. So $4,000 drop, right? And then the market comes up, maybe makes me feel a little euphoric, like, okay, that was it, the pain's over, right? Back up to 19,000, and then drops again down to 15,000, okay? And this is all the way, like I had to live through that and then sleep, wake up the next day and it's still dropping. Okay, it's still dropping. So it's a whole new day, and you're watching your price go down by thousands over the next few hours. Then let's see. Oh, and by the time the session rolls around, actually, by the time New York session even starts, you start to go up. And let's see where New York session is. Right here. So New York session, I mean London session ends. Sorry, when I'm definitely in bed by the time London session ends. So I have to go to bed with a small back increase up to 17,000, right? And then let's see, 2 days later? One, two, yeah, about 2 days later, you finally get up and you break your high, right? And you're feeling good and you're feeling euphoric or whatever. And immediately, let's see, what session is that? Oh yeah, so you go, me personally, I'm going to sleep, right? Probably in euphoria, and I wake up again, kid to school, and so I went from 22,000 up down to 16,000, $6,000. I go to sleep and I wake up and $6,000 of unrealized gains is gone from my account, right? And this is kind of a consolidation zone, um, still in this big area. Let me see if it actually pulls back. Does it ever actually pull back deeper? Yeah. Okay. So now you have to feel yourself. So you're watching the market on your entry time frame, and it has broken a low, right? And now you're only up. Um, $15,000. And remember, at your peak, you were up $22,000. So $7,000 eviscerated in your unrealized gains, and it's broken a low. So now you're feeling scared, right? You're
Yeah.
feeling scared. You feel
And
like,
also, your brain is going to start protecting you
yep,
from
yep,
this,
the
and it's going to
pain and
say, "Oh, you just broke. That's a quite a major low you just broke.
yep, t
Maybe you should just take the
close it.
money and run."
Yep, close it out. And yeah, and we know how it plays out. We've already seen it play out. And then it gets even lower and lower and lower. And so again, this is on a 15-minute time frame. So let's see, what time is it that it gets even lower than this? That is, oh, no, so this is the afternoon for me, and then evening when I first look at the market, for the very first time I'm probably even looking at the market, I'm down to $14,000, and it's now looking like a downtrend. You know what I mean? And so okay, well, like we're running through time, and I don't want to like beat this dead horse for too much, but you guys get what I'm saying. Every single one of these moves, you feel, and this is a 15-minute chart all of my trades are on a 15-minute chart now. So, these big long trades that I would have would be on a 15-minute chart, and you'd have to live through each of those minutes watching your account just go down and down and down. The only reason that I'm able to talk about it and throw them up there and bring it up publicly to you guys so that you guys can use scrutiny and test it is because I've already tested this. So I know for sure you can line up the time frames and sweep those large targets, which I just showed a random bar and found an example of. Yeah, I cherry picked it, but it happens over and over and over. So I know they happen and you can do them. But living through
Yeah,
it like this is another story, especially when you're new. So my suggestion to you guys is don't be afraid to peel off position. Reward yourself for having a correct trade. Even if you later have realized you ruined your gains for being correct in total, it doesn't matter. You've protected your account and built capital for being right. That feels good and will build confidence. And two, use logic to move your stop up. Don't just be aggressive. Don't move your stop anywhere. Use logic. You saw how I was going. Okay, here's lows. Where would lows still get swept? Okay, this is yeah, I'd lose 20 whole R of my 40 R, but still I'd be locked in 20 and I'd have to be wrong about my trade for it to be same as your stop loss. Your stop loss is there to say I'm wrong about the trade, let me get out. Same with moving it up. You don't move it up just to get out of the market
yeah,
because you're scared. You're moving it up to a place where you get back out if you're wrong for the trend to continue, basically.
yeah.
So anyway,
And just
I
make sure you're sticking to your game plan. If
yes.
just like you set up, you've got a game plan for if you're going to be moving stop losses. Don't just go, oh, this feels right. Make sure you have, especially when you're starting out, you got to have your plans, and you got to follow your plan. Otherwise, you just it ended up just going off feelings. And
Yeah.
when the market does what it's doing currently, what it is just there on the 13th of Feb, you're gonna go, oh, I feel like it's gonna, rather than
Mm-hmm. Mm-hmm.
statistically, this is what
Instead of
happens.
yep, instead
When feelings take over, that's when you've already lost.
yep, 100%. Because yep, your feelings aren't your analysis. The other one more point I was gonna get before we call it time is that trades like that are not common. So if you notice, probably
Hell
for
no.
every trade you see me mark up that has like a 20R, you go back through all the lives of last year if you want, and for every trade that you saw me mark up that was 20R, which maybe was 3 or 4 in the year, and of all those, only one I was in on, and I got broken even, and but the analysis played out, and so it's unfortunate, but it doesn't matter. Of those that I marked up, there was probably 50 5R trades or 6R trades or 4R trades on the way there. So the system works the way I like it, and I get nice rewards. Rewards way above 2R. You get like 3, 4, 5, 6, 8R, depending on the situation. Trades higher than that start to get rarer. Trades that are in that 20, 30R range are rare. So remember, I was using a 15-minute inside of a 4 hour. So each of these candles is 16 15-minute candles. So trends are happening inside of this, and the trades that are big, the 20 plus R's that you saw me mark up, are at the bottom of these legs, or at the top of these legs, not in between. So all of these candlesticks that you could get price action on in those 3, 4, 5 R's that you can use the system and do are not producing. None of these candlesticks are producing 20R trades. Do you see how they pull back and revisit those candlesticks? None of them are producing. It's only the extreme point ones that are producing the long distance, right? When it touches the extreme points of the market, does the market move? I really want to stress that it doesn't happen all the time. You're not going to be like, oh, I got it's a bullish trend on the 4 hour, it's pulled back a little bit, and it's flipping bullish on the 15-minute. It's time to just target all the way to the 4 hour high. It doesn't work that way. You have to be at a point on the
Yeah.
4 hour that matters. You'll never see me mark up a 20R trade at this point, right? So this low right here. I've seen this low get swept into this zone, and maybe it'll flip. Uh, you won't see me mark up a 4 hour high at that point. That's a 15-minute trade. This point maybe, right? I mean, this is a bad example, but still, in real life, I can't see the future price action. If it comes down and liquidates that into this stuff and flips, that's when I target a high on the 4 hour and
Yeah.
be wrong in this case, right? If it did happen, which
Yeah.
maybe it happened right here. I don't even know. It could happen right here. I don't want to go look at it right this second. But I'd be wrong, and that's okay. It's waiting for that point that matters, not being right or wrong. That's the thing. There will be a time that you might see an example in here that is correct, but I'm telling you, that's just not how liquidity works. If it's coming down for this, it might come down for all this before the trend continues. It's a lot of money to continue a trend on a time frame. So even on the 1 minute, the same thing applies, but for the 1 minute, right? So same thing on the 1 minute. It doesn't just reject off of all these mini points to the new high. It comes to a deep point and then touches the high, right? It's like that on every time frame. It's just the 4 hour is a lot more money than the 1 and 5 minute, so I use it as a grounding, and then the 15-minute is enough zoom in. It's 1/16th of the size. It's enough zoom in to get the big rewards. You can do it, and I've shown over and over and over again it's possible. And I had a Moonflower. You marked up that nice 28 or whatever R, and it inspired me to talk about this today. That I love seeing those kind of trades, and I really want you to keep striving for those. But remember, one, they're rare, and two, manage them properly because um, you don't want to be up 15, 25R of a 40R trade and watch it go down and hit your stop loss and lose an R. It does not feel good, and it's not worth losing that mental capital for that extra 25R risk. It's not worth it. So just think about all of these points basically. Anyway, yeah, you got anything to add on that, on the big winners thing
No, no,
before?
you covered it pretty well.
All right,
Perfect timing as well. So,
sweet. Well, thank you guys for coming, and Um, hopefully I'll have more trades that are not break even for the next live, so we can talk about something juicier. Uh,
hey, we showed one good trade.
yeah, no, two.
Um,
You had two. Well, no, one was from last week, but okay, yeah,
yeah,
one good
yeah.
trade.
Before we
Technically,
go, Jezza Lemons. Also, it's not possible to see the draw. To see, it's not possible to not see the drawdown, right? Like when you say I set it and forget it, the trading ton MT5, can you even not see the dollar values of the trades? And the P&L will be visible. So when you trade the next day, when this trade is continuing, you will not escape the status of the trade because you will see the trading panel when you trade. So is it impossible to escape the psychology? Um,
I'm gonna read that while you're
that's,
answering that so I can properly absorb it.
yeah, that's hard. Like, no, you can't just get rid of the trade so that you can't see it. Unfortunately, no.
So
Um,
you can set on the computer MT4 and MT5, you can set your trades to not show the cash amount and to show percentage, which is better for its psychology. I think if I remember correctly, I don't know if it's been studied, but I think
You
there's
could do
enough
that on the
anecdotal evidence
MT5.
that it's. But but there's no way to eliminate the trade from view completely. Like to have the trade that's losing or whatever. No, you're gonna have to live through it, and that's part of the discipline. This is why I advocate for demo first, because living through it and feeling that, honestly, if you're taking it seriously, will feel the same on demo. Only you don't actually lose any money. No cash it was spent to learn that lesson or feel that pain. And so, if taken seriously and done properly, I feel like you can learn and stretch all these muscles and stuff, metaphorically, psychological
And,
muscles.
and and going through it sort of to get through that sort of psychology sort of side of things, if you have a well thought through trade plan where you know that, for instance, when uh, this X, Y, Z happens, I will exit the trade. If ABC happens, I will stay in the trade. And this is where I take my stop loss. If this happens, this was if this, then that. If you have a whole bunch of game plans, then you know that you are following the process. And
So
so, win or lose, or break even, or you know that if you keep following that process, you will eventually come good because you've tested it and you have a plan in place.
yes. And also, I have some specific advice to traders that trade like me on the 4 hour chart or any longer time frame that you're going to be in a trade. If swinging for a big trade, you're going to be in a trade for days, basically. Um,
Hmm.
I traded on my phone. I trade on my phone, not traded. I still do. I trade on my phone, and there's a lot of limitations to it. I still use MT4, so I can't do any of the cool settings that can turn the P&L to percent and stuff. So I had to like face this stuff directly. And so my best advice, this is personal advice, so this is not general advice. This is one for people that trade higher time frames, and two, I don't know if this will work for everyone. I just suggest it because it genuinely really worked for me. I had trouble not looking at my trade. It's on my phone. So I could at any moment when I'm not doing something that's busy work, pull up my MP4 and then take a look at that trade. And it possessed my life, especially during drawdown times. I mean, I would be in a bad mood and sick about it and constantly checking it and like telling myself stories on when to get out of the market and reanalyzing the trade live without actual analysis, but feeling and all these, it's just bad habits. So what I had to do is overwrite that habit with something positive. I made sure I did something. So I would use the time that a trade was in at the time I was trading in the afternoon. So I used the time the trade was in to then take my kids out and go do something that kept me busy, and I literally wouldn't be able to check my phone. And it didn't do anything for the trade, right? A lot of times, if I was in a long enough trade, I'd still be in the trade after and I'd go back to checking it. But it stretched that muscle that, oh, yeah, I was in a trade and whatever it was doing, up or down, I was going through this and it didn't hurt me. I lived through that. And just living through that and actually doing something else and realizing, oh, that didn't kill me, metaphorically, but really your limbic system is important. Just going through that really did. Um, kind of reinforce that concept and make it easier to be in a trade for a long time. So that's my suggestion, to do something fun and busy work or fun, something that will distract your brain
Yeah.
in a positive setting that makes you live through it and realize, oh, that didn't hurt me at all, and get used to it, basically.
Yeah. I've been in a trade, and I will play. Used to play like what's it called, like an MMO type game. Uh, and I would get lost in that for about an hour, and then I'd come back to my trade, and I'd be like, "Oh, it's finished." You know.
Yeah,
Um, at the end of the day, we all have different triggers and different. It's going to be very personal the way that we solve these. So you need to be very honest with yourself and what triggers you and what you can do to sort of combat that as well. We have another question
oh yeah,
in
we can answer it in the live.
the
I decided to text it, but yes.
Lewis. Sorry, I'm late for the stream and I missed the preamble before you got to the 20R trade. My question is, to get to those sorts of numbers, you're showing a long time to stay in the trade. But do you think you could have had a better return if you'd intertrade trades over the same time period?
I,
If you can prove it, then yeah,
yeah.
of course you can. But at the same time, if you're going intraday trades, I would argue that you're more likely to have better um, profitability using the higher time frame trades
I
rather than diving down and having to deal with a lot more noise on the intraday. But
I'm
as Jezza has said, like you don't do that very often. You're getting your 5 and your 6 hour trades anyway, so you're kind of doing a bit of both anyway.
yeah, I am. And to answer that specific question, I'm gonna give you kind of two answers, and I think one you're not gonna like, but it's the more important answer. So I'll give you the answer that you want first, the yes or no. I think the answer to that is honestly no. No, you would not make more money trading in the interim because I get what you're saying. Like that's a lot of leg movement for you to take trades, but that also means a lot of risk and analyzing. That was one trade, two maybe, because I did show a loser right beforehand. Like if I took the first liquidity sweep, it'd be a loser. So at most two trades, right? And the risk factor was only those two. So at worst case scenario, I lost 2R in that time frame, quote unquote. Whereas you're exposing yourself to much more risk than that, not just of your system being wrong, but you as a human being the more exposure to new trades you put, the more statistically you also expose yourself to mistakes as well, which means more
Yeah,
trades means more mistakes. I only did two trades, so I had only like a whatever that for
maximum
two out
risk
of
of 1%.
yeah, whatever that risk was for the mistake. Whereas if you trade a bunch of times in between, you have a bigger. So even if you have a nice reward system, because of how random the market is, no, I genuinely believe on average you're gonna have someone out there that's gonna prove me wrong for sure. So yes, there's a way to get more, but I think on average the answer to that is no, you wouldn't make more on those kind of trades in that time frame, usually on average. But the real answer I'm going to tell you is I don't care. That's the real answer. I don't care. It doesn't matter because sure, there are different people that trade differently, and someone might be able to squeeze way more profit. They might be able to find 100R in that time frame by getting a whole bunch of 2Rs on the 5 minute time frame or whatever and be successful at it enough to do it. It doesn't matter. It's not the
Hmm.
system that I'm trying to show. So even if the answer to that was absolutely yes, it doesn't change the fact that it doesn't matter because it's not part of the logical system. I'm using logic to identify a point where you could squeeze out 20 plus R successfully with nothing but price action and logic. And that's the point of it. It's not about maximizing the profits, but using logic to get a high profit in the first place. So that is more important than me having a replicatable system where I can teach it simply to like a child or something like that if I wanted to. That can possibly squeeze out those large targets is more important than a complex system that can catch all the movement in between also. So that's my real answer is I don't actually care. In the nicest positive way possible too, though, not in like a tongue-in-cheek or condescending
The,
way.
the nicest way to possibly not care.
Yeah, yes. Uh, well, I don't care about how other people trade anymore. I used to a lot. I really used to a lot, especially like people I look up to, like Christy and um, I'd even look at Bear and Jay's trades sometimes, and just like not even to copy them after a while, but I just admired them. But I literally, genuinely, honestly don't care about other systems anymore. I don't care how other people trade. I do want to
Yeah,
learn more things to help other people out in other ways, but I have no care about squeezing out more profits than my system gets for me. I don't mind.
100%.
Anyway,
Yeah.
yep. That being said,
Cool.
yeah, I think we're good.
I'm gonna go to sleep.
All right, yeah, me too. This is very late. We ran this one super late, so thank you guys.
That's all good.
I'm
We'll be
gonna,
back at we'll be back at our normal time next week. Most likely bar any kind of catastrophe. So
yep, yep,
yeah. You guys have a good one. Hope you if you're trading in the New York time zone, I hope you're profitable.
yep. Good luck,
And
everyone.
yeah, have a good one.
Hey, have a good night and or morning, and I'll catch you later, man.